Hello folks, I'm L.A. Little and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about tomorrow. I come on here and do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time, here from the base of what is a very snowy mountain. The Rocky Mountains, folks. Got about almost a foot out there at this point, and it just keeps coming down. I don't know how long it's going to keep coming down. The market quit going down, though. We got a nice bounce today. Nice bounce. Well, maybe that's a pejorative term. We got a bounce, and a bounce it was. It was what we were talking about last night. That setup was there. It looked like it was going to try. It did try. I told members today to look for the bottom of this bar as the place 1760.64. What did we get to? Just shy of it, 1758.73. So a bounce is in place. That really is what we should see. Now the question is how is it going to react from here? In other words, what are we going to do from here? We're going to bounce up farther. We're going to go sideways. Remember, we had this little congestion area that took place before. And then we got the big push down. Well, are we going to see another congestion in here? Big news is out on Friday, more than likely. That's probably going to be what moves this market. And that movement, more than likely, is going to have a lot to do with probably what we see in terms of the employment numbers on Friday. So let's look at the. I can't pull up the ending numbers that way. I can pull them up a different way. Had a lot of problems as we tried to get started here today, so you're just going to have to bear with me. S&P, I don't have the ending numbers in front of me. I wasn't quite as prepared because I had a lot of issues getting up and running here. But the Dow Jones was up 0.5%, S&P's up 0.8%, and the Nasdaq was up 0.9%. A bunch of earnings, a lot of earnings coming out. Still will be next week. Next week is probably about the end of it. Is the majority of it's going to be over. You've had a lot of economic numbers come out. Most of them have suggested that things are not quite as well pretty much around the world. You still got deflationary issues. You got the ECB BOE that's keep meeting on Thursday. That's going to be a big meeting, and then of course employment numbers on Friday. So that's the background of what's taking place. In terms of the technicals, well, we still have ABCD structures on the way down, right? There's an ABCD structure here on the way down, still in place, still hasn't happened. Last night I was talking about the possibility that we'd see another ABCD structure take place in a different way, and that is that we would see a nested ABCD take place inside here from, let me get this drawn right, from this price point down, right? And what you need is a high tomorrow that is higher than today's high and a low tomorrow that is above today's low. And if you get that, right, then that will set up some sort of another potential ABCD down. And then if you put them all together, right, then you have the potential for something larger. So we'll have to see how far this wants to bounce. If it can continue to bounce. They had the futures up this morning, and you know, that zone that is coming back into that looks like it's going to be a tough spot to get over is right here. We'll see if it can get over that. This price point was the swing point break on the daily and the weekly. If you don't get over that by Friday, that says you got multiple swing point breaks on multiple time frames. And what does that mean? Well, I think everybody believes me now that these things do have significance. And that means that we're probably going to go lower 2 to 3 bars on the longest time frame, which in this case would be a weekly. So, you know, that's the way the picture is setting up. We'll have to see if it actually fulfills. Let's look at the weakest index, which is the Dow Jones. Dow Jones has an ABCD down as well. This guy has just been bludgeoned. So we got an ABCD structure from here. That one actually got higher. Yeah. Okay. So, and I was just thinking about what I just said, and it's true. So this one got higher. It actually had a higher low, higher high, right? That's what you're looking for in an ABCD structure. So Dow Jones, this thing's only within, you know, it got as low yesterday as like 1%, a little less than 1% of that projection there. So the Dow Jones looks to me like it's about done on this time frame. The problem with the Dow is just what we were talking about with the S&Ps, and that is that the Dow broke last week on the weekly. It's carrying through now. 2 to 3 bars usually is the way it carries. That would mean another week on the Dow of some pressure. So Dow's already doing it. S&P's trying to do it this week. And then if we walk over to the Russell to me looks like the one to watch, because the Russell has nested ABCD structures. They're clustered right here together, 2 of them, and it's down here testing them both, right? Broke underneath both of them. It's bouncing right back, trying to get back above them, right? This is retest regens now happening. Less volume on the bar of the break than the bounce. This looks like a problem. And if the Russell has its way, I suspect what we're going to see is the ABCD structure that's in place here, right? That one takes you down into that area. And let me clean this up. Now, just like we saw on the S&P, if you can get just a little bit higher tomorrow, close with a low that's higher as well, then you're going to set up that nested ABCD structure inside. Both of them probably measures about the same price point depending on how high you get here. This is the index to watch, right? This is the guy to watch. If this guy can't climb back over here and get back up into a higher level, in other words, the retest regen, this regenerate off of these swing point lows, and let's actually get a number on them. So this one is 1107.18, and the other one was 1107.70. We got over both of them. We closed at 1102. Actually, we didn't get over both of them. We just closed. We almost got to the top of that one. So you can see where the pressure is. You can see what it's trying to do. Hasn't been able to do it. Tomorrow is kind of a key day, because if you think about the time frames again, just had a big spill, you got a little bounce. Tomorrow, maybe you get a little more follow through, but if you can't really start pushing up and closing at the highs and get back over these retest regens, then these are going to try to regenerate lower. So in other words, coming into Thursday and then Friday, the employment number, and you got to think the employment numbers people are worried about. It's going to be hard for anybody to do much buying on Thursday. So if it doesn't happen tomorrow, it's probably not going to happen. So that's the one to watch, in my opinion. This is the one that would probably tell us something. Let's look at the sectors. I didn't get a chance to look at most of this today. Not the ending numbers. So let's see what these guys look like. Last night when we were looking at them, we had most of them looking like they want to go lower. So the IYT gets under, back over, saves on this swing point, but has more volume. that looks like that one can come right back at you. Semiconductors, these guys struggled all day. Yeah, and they broke a swing point. They broke this one. They're trying to break that one. I don't think they broke this one, actually. Maybe they did. 40, 48. No, it didn't. Yeah, it did. 40, 46, yeah. So it broke these two. So yesterday we had two of them break. Right, you had this one break and that one break. Yeah, that one had not broken before. That leaves just this one, and you can see the kind of pressure that's applied as a result of that. Now, today you got a hammer on less volume. That says this thing's going to try to press back up here, so now you're going to have a retest regen situation coming back into these two lows. And I would think that's probably the range that you would expect for this thing to have problems as it tries to come back. That's definitely the initial range. The higher range would be this bar. That would be the full retest regen. But in a weak market, you can't expect full retest regens usually. XLB, let's see what this one did. So this one was coming down with some volume yesterday. It had already broken a swing point low. Not much of a bounce. And remember, this broke on multiple time frames, and that still looks like it's going to try to go lower. XLE. And this was the one that broke down first and has a little bit farther to go. Weak bounce. They're all inside days so far, so nothing really there. XLF, nothing there. XLI. Now that one's got a hammer too, so that's two hammers we've seen. Now the XLI had broken multiple swing points as well, so this isn't a clean hammer, it's kind of a hammer. You know, usually you want a hammer with nothing on the top there. You want the high and the close to be towards the top with no tail on the top of it, so it's not as clean as possible. But and the reason for that is look what it did. It came right back into these lows. 49.13, you know, 49.12, almost got to it, folks. So many times I talk about and I have, you know, I have conversations with people that you know give me a hard time about technical analysis. You know, give me a break. I mean, come on, you're coming back into a swing point low. Does it have significance? Well, yeah. I mean, as you come into it, what do? They sell it. I mean, is that coincidence every time this happens? Give me a break. You know, it's not coincidence. You know, retest regens, they have value. I did a lot of research on this. This is not low probability stuff, right? Depending on how fast you come back, you know, it's a coin flip. A little bit more than a coin flip. But if you come back after 6 bars, it's better than a coin flip, a lot better. And if you do breaks on multiple swing points, coming back even fast is hard, right? All these things play together, right? And they make sense. If you think about them, they make sense. You know, I mean, just ask yourself, do you want to buy this? You know, after you just got pummeled, do you want to buy it? No, most people don't. And the guys that run the big money are no different than you and I. I mean, they have a slightly different objectives. They have to be invested a lot of the time, right? Most of the time. So that's a different objective. But from the other point of view, you know, do they really want to buy this? No, they're going to probably hold a little bit more cash than they normally do. You know, because things don't look good. And it's just the way it is, right? So anyway, sorry to digress, but I had this running conversation with some jerk tonight on Market Watch. You can go read it if you want, you know. And I really despise people that call me or that do personal attacks on me as if I'm some sort of a charlatan, you know. I sit here and educate people, teach people, give a lot of information away. Certainly I want you to, you know, to subscribe and eventually get the full worth of what I have to offer. But, you know, I don't force anybody and I don't hold anything back. And then people come and attack me as a charlatan. You know, it's disgusting. I mean, I can understand where they come from, and so I can kind of understand it, but still, it's just bothersome. Okay, so we got XLK 15.9. So it didn't have the volume. Did it get to the low? That low was 3403, 3396. So this, and I don't remember if I talked about this last night, but you undercut this last night, right? But you had a lighter volume. And I think I actually did talk about this. That should lead to a bounce, right? And you got a bounce, but man, it wasn't much of a bounce, was it? No volume, not much bounce. Again, this continues to tell us there's a lot of pressure on this market right now. XLP, let's see what that one did. Okay, so yeah, it's almost done with the ABCD, I think is what we measured, and yeah, this one's in trouble. And it's going to be in huge trouble, which I pointed out last night, if it continues to break, because you got clustered swing point lows on the intermediate term time frame. That's a problem, right? If these break, that would be a significant break. Now, the XLU, the XLP, those are typically looked at as defensive sectors. But defensive sectors in a bull market don't break lows, right? They don't break intermediate and go bearish. The XLU already has. The XLP's trying to. And even, you know, the other thing that's really difficult to wrap your head around right now is that, you know, and they always like to say this time is different. Well, it's always different in a little ways, right? And in this case, you know, you have unprecedented intervention in the markets. Unprecedented. Never before in history have you had this kind of precedence take place in terms of quantitative easing in this grand experiment that they dreamed up. You know, the distortions are huge. So why should I think that the safety sectors being pushed down as they are somehow is okay? I mean, maybe it's not okay. Maybe the safety sectors are the ones that are going to go first. You know, I mean, the whole thing's distorted at this point. So, you know, I don't know how to read that other than the fact that it's not a good thing. XLV, well, they didn't get much bounce either. Big volume down. That looks to want to try to go lower as well. And the last one, XLY. So we have two that have basically hammers, right? XLY was through with an ABCD structure, so it's getting its bounce, but it's going to have huge problems on the way back. So we have two hammer type reversals, one good one, one so-so. We got about 3 or 4 of these still pressing down. You know, so we could probably bounce a little bit more, which is what the indexes are wanting to do. Let's look at the ox markets and see if there's anything there before we decide on this. Okay, where are we at here? Let me get the dollar up first. So the dollar hasn't been able to go anywhere yet. And it's just hung here. I can't construe this bearishly though, right? I mean, when I see a gap like this, right? Gaps, and then you see them hold, you know, typically they're going to follow through in whatever direction they're going, right? Unless there's a reason not to. Well, in this case, the volume coming back into these bars, right, was coming into a pretty big volume bar, and coming into another wide price spread bar. Yeah, it probably should have gone lower and tested the bottom, but it didn't. It's flipped around. Now you got the opposite case, right? Now you have the case where the dollar's up here testing this high, right? And the volume push up there was pretty good compared to what's up there, right? Which makes you think it's going to try again, and it hasn't yet. Until we see this try again and fail, I got to continue to think that it should try to push higher. If the dollar pushes higher, that should put some pressure on commodities, on gold, so forth. lately, commodities have been spiking whenever the market has been selling off. So, dollar being a little bit stronger, you would have to construe it as probably positive for some sort of a bounce. So, I guess I'd have to look at it that way. Let me look and see what the oil market. The oil market was up about, I think it was up about 0.5% today. USO, that's not doing anything. It's just hanging up there. This one actually does look like it's going to come back. I saw UNG was up another, 7% or something today. You talk about some volatility. This thing's been up 7 and 8, down 7, 8, down up 10, percent per day. Hey, that's a heart stopper type of market. Bonds, wow, absolutely no volume. Well, this will be interesting. It's an inside day, so this will be interesting when it tries to get back into what is the support zone. What will also be interesting is whether this volume stays subdued, and given the volume that's already came into this, it looks to me like it's going to have the volume on the weekly. So the gist of this is that it's attacking the weekly with higher volume, right? So even if it does pull back, that's just saying that it's probably setting up that ABCD structure after a long, fast move higher, right? I mean, in bonds, this is a big move. So if it pulls back a little bit, maybe back into this little bottom of the support zone in here, right? That would just set up the ABCD structure to try to go higher, which would take it up to about there, it looks like, which is those price points we were talking about. So bonds, a little pullback, but then, more up. So if they pull back, again, that's helpful to the market. So that says the market could continue to try to rise or at least go sideways. So that's supportive. And I don't see anything else here. I guess I got to look at the junk bonds, see what they look like. Well, they can't lift. Yeah, so let's try to wrap this up, and I'll take any questions you might have. And I guess I should check to see if questions were emailed or texted to me. I don't see an email. Let me see about text. My thought here is the same thought I had last night, and really today didn't change anything. Matter of fact, it started to do what we were thinking it might, and that is that we got a little bounce going. Right now, it's just a dead cat bounce. Now, last year, anytime a dead cat bounce got going, it became a V-shaped bounce, and it just kept going. This, of course, isn't last year. At least so far, it certainly doesn't look like last year. And given that, I'm not sure that I would expect a V-shaped bounce to take root. Let me quickly, since I have time, let me quickly look at the world markets and see if there's anything there worth looking at. So these guys are still closed, and so I'll have to clean up the quotes. Let's look at the Nikkei. Nikkei got hammered again. Oh man, look at the volume come out of that guy. So let's look at it on the weekly. Okay, so that price point, 14,208, 14,008. You're doing 497. Doesn't have the volume. Doesn't have the volume. It certainly does on the daily, but it doesn't on the weekly. And is that because they were closed? Let me remember what the dates are here. So 3 and 4. Yeah, so it's been open both days. So the volume, oh, that's because we're on Tuesday. Volume's 4. Yeah, it's got the volume on the weekly. So let me correct that. So the weekly has the volume. So you got a break of multiple swing points, 4 of them on the way down. You extend on an ABCD down. Looks like the ABCD down's done. Right? That says this thing probably should try to set up a bounce now. Right? That was an ABCD and it more than extended. Right? It should have stopped about there. So you extend all the way down to the bottom of the support zone. So we should get a bounce tonight. I don't know how much it's going to bounce, but you got some huge damage here. But whatever the bounce is, it's just going to set up the next ABCD structure probably, right, to come on down farther. And with the weekly having the volume that it does, it looks like the swing point lows will be the next target on the weekly. So Nikkei looks to be in trouble still. Let's look at Korean index real quick. That one also dropping like a rock. Let me go look at Brazil. I haven't looked at it in a while. Brazil's in pretty bad shape. These guys are so, the rest of the world, emerging markets, they've been sold down so hard that they can bounce, and they can bounce pretty good. And actually, they did today, at least on our markets. I don't know if they will on their own actual indexes or not. Here's the CACs. So the CACs, look at the CACs, gets under it, back over it, has more volume. That says it can go lower again. So this one's not done either, and it looks to me like it's going to come after that swing point low, the bottom of it. FTSE, let's look at it real quick. And FTSE tested the bottom, has more volume. FTSE wants to break before it's over. Oh my goodness, so that's the wrong one. Let me see. Where's the DAX? Here's the DAX. So the DAX, it's coming down and hitting the big bar with volume. So the DAX also looks to test the lows and try to break before it's over. But as you can see on all these, right, we're seeing this everywhere now. And I'll wrap it up with these thoughts, is that what you're getting is you're getting ABCD structures that are starting to finish. What does that mean? That means that you can get some sideways movement, right, and some potential pushes back to the upside. What does that also mean? Well, it also means that we could be setting up the next ABCDs to go farther. So that's a possibility. And as we get farther down, we start breaking what? We start breaking intermediate term time frames, which becomes a potential big issue. Well, we're not there yet, but if we do, if this continues, that will be an issue, and that will definitely be something to watch. Not quite there yet. If we get there, if that's what happens, then we're going to have some larger issues in terms of destruction. Remember, bull markets won't let you in. Bear markets, they don't let you out. So don't be surprised if this market doesn't give you much of a bounce, right? If I go back to the S&P and close this off, if I go back over here one more time and show you, as a reminder, a weak market, and where is my market? There it is. A weak market like the S&Ps were, right? Once it becomes weak, and once it can't get going, and let me see here, I'm on the wrong, here, let's pull the S&P over and put it on the daily. Once you get a weak market, right, and this thing can't lift, this is the kind of case where it won't let you out. If you were in here, what were you doing? You were waiting for this test up here, weren't you? It didn't give it to you. Bear markets don't let you out. If this one does the same thing down here, don't be surprised to see it down here before it's over. Folks, have yourself a great night. Take care of yourself. I will see you tomorrow. We'll do it all again. I'm LA. This is and was your daily TA wrap. You have yourself a great night. Take care. I'll see you next time. Good night, folks.